Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick. Busy day today. It looks like the drug stocks are in focus after the White House has backed away from its drug rebate program. Talk about the ramifications of that in the market. That's actually really the big news of the day. A lot of volatility in healthcare stocks this morning. So we'll talk about that. Talk about the couple of earnings reports we have, some big ratings, and our guest, Marc Chaikin, will join us at 8:15. He is the founder of Chakin Analytics and a longtime veteran of these markets. Joel, are we still at S&P 3000? Oh, wait, let me unmute you. I muted you. There we go. You're on mute now. S&P 3000, Joel.
We're knocking on the door, Spencer. There's no such thing as a triple top. You had a high at 06 even last week, 0750 yesterday, pre-market high 0675. Absolutely no resistance above that area, uncharted waters. Crude continuing a furious rally here, up 21 cents at 60.65. Lower supplies giving a big boost to crude oil. Buy everything. Gold up $10 at $14.2260. Silver back over $15, up 7.9 cents at 15.30. And maybe not buy everything. Bitcoin in the red, down 460. We're talking the futures here at 11,810. I guess they didn't like the comments yesterday during Jerome Powell's testimony. Triple D head on a swivel as usual today. What's going on?
A lot of news, a lot of individual stocks moving, White House policy moving stocks again. We are 3,000, so we hit the big, I saw, our cashing with this 3,000 hat on there yesterday. So hooray, hooray, S&P 3,000. That's how we celebrate here. Let's move on to this White House news because they are moving the drug stocks here this morning. If you're looking at UNH trading up significantly, WBA, CVS, all trading up. Headline last night from the White House. Give us the details, Mr. Israel.
Yeah, this had been a centerpiece of the proposals to reduce drug prices, but the White House has announced that they are ending their rebate program for government drug plans. And that's the headline right there, basically. This was a rebate program that, as I understand it, would have helped subsidize the price of drugs for consumers. It wouldn't have lowered them outright. It would have the government help subsidize the cost. But that cost is what is ending this program. The argument was that it was going to cost the government $180 billion over the course of a decade. So this program now appears to be over, and that is your catalyst this morning for healthcare.
And if you're looking at the individual stocks, a lot of XLV components, so you'll see XLV trading substantially higher than the overall market there. But if you want to look at individual stocks moving, these health insurers, UNH is up 2.5%. CI is trading up 5% here this morning. You can just keep going through the whole list of them there. WellCare is going to trade up. WCG is bid up $4 right now. I'd imagine that could trade up as much as 10. These are going to move here this morning. Joel, jump in. Maybe some quick technicals. Also moving. WBA up substantially. CVS up substantially. Good news for these stocks.
Yeah, great news. And it's just a great example here of when we talk about, the chart doesn't look good. It's in a major downtrend. Look at technicals. But the news is what moves the stocks here. And these stocks put in a long base. CVS put in a long base there. Now breaking out, to chase or not to chase. That's the question. You had a gap up day. This was a couple weeks ago where you had a high in CVS. Where's that at? Around $58, 57.75. We're above that right now. So I don't know. Big move for CVS, opening the resistance above 58. I don't know, Dennis. Can you see any size there? It's just kind of See a
I don't
lot
have my
of
book
highs.
open even here yet. I've been so busy with news. I haven't even opened all of my platforms, believe it or not. This doesn't seem like a crazy day. It's been a crazy day. Just so many individual movers. You can look at Humana. You can look at, I mean, we can just keep going through the list of the health insurers.
Yeah, look
So
at these
many of them
things.
moving this morning.
Yeah, well, I mean, without going through all the stocks individually here, keep an eye on that pre-market high, right where it is at 9:29, 29 seconds. See if you have a daily high or weekly high at that same area, and then keep an eye on the open. If you open up above at the pre-market high and you continue going, then go with the trend. If you're worried about a rollover, keep an eye closely on that opening print. I mean, these stocks have not been up in this area for quite some time. So just question whether or not some profit takers come in. Sleepy charts. I mean, Walgreens Boots Alliance here. It's got a huge gap to fill here between what happened. I think that was an earnings day. You got a gap to fill between 56.44 and 53.14. So nothing but air in here if you're caught on the short side.
So this was a proposal that drug manufacturers had supported and the pharmacies and insurers had not. So based on that, it's interesting to see the moves this morning. We also saw a couple of drug makers move higher, but I think Dennis was saying that was because of drug news that Eli Lilly had.
Okay.
Well, that's why you're seeing the pretty much everyone but the drug makers move higher on this.
If you want to really look, IHF components, that's your ETF for your healthcare providers. This thing is going to move here today. It's already bid up at 175.20. It's going to move probably more than that. UNH is 22% of it. Anthem is another one we forgot to mention. ANTM, it's up $9 here right now. CVS, like we said already. HCA is another one here. That's in the index. I'm not sure, some are going to move more than others. Centene is another one that comes to mind. CNC, that is trading up substantially here too in the pre-market right now, although not up as much as maybe some of the other ones. So interesting there. CNC still just kind of hanging on, only up 3%. But maybe it affects different ones in different ways here too. So just to understand that they may not all move the same, but your IHF components, that's going to be your major mover off of this news.
And how about the old dog Rite Aid trading up 36 cents here at 9.60? So after the reverse split, that's had a little bit of a rally here. Let's see what happens at $10 in Rite Aid.
All right, so jumping back over, and like I said, I've got my head on a swivel because there's a lot of individual news here today. Let's go back to what Spencer was just talking about. Eli Lilly has some negative drug news. The stock is trading down $3 here in the pre-market. What is that news?
Well, their news, they had highlighted a phase 3 study in the New England Journal of Medicine on a treatment for cluster headaches. I thought based on the headline that was positive, but you're telling me it's not. So unless there was something else.
Definitely not positive. Stock's down $3. So might read positive, but market says negative.
Here, were there other? Yeah, well, so this is one of those things where it might read positive, but market says otherwise. So I don't have much more insight for you on that because that's the headline.
What is the head? So read it to me again.
They had published and highlighted a successful phase 3 study results for cluster headaches in the New England Journal of Medicine. You would think they wouldn't publish anything unless it was a successful study. I guess that's
okay. So I'm not following the story close enough. I can just tell you it's down $3 in the pre-market. So market says not a positive. Market is going to be right on this one. 111.50 is where it's trading right now. 110.
There you
that's
go.
Your low. That's the level it's got to hold. 110.02 was that low back on 28. That's what it needs to hold. We'll see what it does there.
Yeah, pre-market low. They got a little excited. They took it down to 109.87. So Dennis gave you a very, very good level to keep an eye on the downside. This is actually a pretty ugly looking chart here, Dennis, since it got over 130. Actually got to 130, 135, and a pretty strong tape here. For the year, Lilly's kind of been going the other way, but was an outstanding performer in 2018. I like the 110 support level. As far as resistance, man, you got a long way to fill the gap from yesterday all the way up to 114.53. I don't see that happening. What else? No, not much. I mean, it's hard to find resistance when the stock goes straight down and then attempts to rebound.
jump over to earnings. We got a couple. Let's go Bed Bath & Beyond last night.
Boy.
Short-lived rally on the initial numbers. When dogs report, they seem to get sometimes a little bit of a relief pop and then doesn't last long as all the overhead supply comes in. I'm going to keep dogging this thing. I've been dogging it for a long time now. Didn't like it at 16, 17 3 months ago. Still don't like it at 11. Give us the details here, Mr. Israel, on BBBY.
The earnings was mixed. They beat on the EPS 12 cents versus 8 cents. They missed on the sales by a smidge. It was basically in line at $2.57 billion. The guidance they gave is at the low end of the previously given range for sales. So, and EPS actually. So low end of the range guidance.
Stock trading down 50 cents. We did get a pop. Where'd we get? A little bit over 12.
Oh, wow.
I immediately when it was over 12, I was like, I should just short it because the sellers are going to come in, and I would have been right. I didn't do it. I should have did it.
Quick.
Yeah, well, it was up there a couple minutes, maybe a minute or two, and then it just started leaking, and I was like, okay, this is going to be one of those that probably just gives it all back. I mean, okay, now you've reported the stock is in the doghouse. Anybody who had hope that they were going to, get their money back on earnings, that hope is now dashed. I think the path of least resistance for BBBY is still lower.
Pre-market low 1071. You had just been skimming on the bottom, just hanging on to $11. So I see 3-4 lows in that $11 area. Let's see if buyers come in to defend it again between 1080 and 11. But once again, any kind of pop in the issue unchanged was 1152, or let's see what yesterday's close was. Yeah, yesterday's close was 1115 or 1152. Sure, a lot of people would like to see that, but looks like we're breaking down here on the $11 level. And I'm just curious, like that news, Dennis, I remember when that news came out, got it over, 17, 18 bucks. Did those people just forget about what they wanted to do with the stock? Was it taking it private or remember that?
It was activist news. This was back in April. There was some activist news getting involved, and it had a huge pop. And what I said on the show that day, and I took a lot of heat for this, people weren't agreeing with me, but I was like, typically when these dogs rally on activist news, it's usually a selling opportunity. It went from 13 to 16, 17. It did rally a little bit more after that, so it wasn't
took some heat,
right?
Yep.
But eventually it did give it back. So I think I said on the show, I think to see this thing 6 months from now, I think it's going to be lower than it was at 14. It is. It's down at 11, and it only took 3 months. So goes to show you again, stocks and downtrends, sell the rips, stocks and uptrends, buy the dips. I mean, that has been working for the better part of a decade. It continues to work. The dogs keep, going lower, it seems like, and the stocks that are in favor keeps going higher. Nobody cares about valuation here. This has been a value trap all the way. Yes, I know it has a 6% dividend, but you got to think, like when you're investing, and this is, putting my investing hat on here again. I had a little bit of rant about this yesterday. Think about what you want to invest in. Think about, the type of business. Don't just look at the cash flows. Don't just look at the valuations and say, oh, well, they're making so much money, it's eventually going to. You got to think about the business. That's why GameStop. That's why we stayed away from GameStop forever, despite the thing having a 10% dividend at one time, because we're looking and look at where the industry is going. It's going, first of all, to free to play. Secondly, it's going, everybody just, doesn't need to go to a physical game store to get it. They just download the games. So it was changing. The dynamics of the industry was changing. Bed Bath & Beyond are huge stores in malls, first of all, which mall traffic still is not, it's a retailer, which retailers are in trouble here. And, they sell a lot of stuff, that I don't know, like a bunch of towels and, consumer products, but I just think you can get that stuff anywhere. So, Walmart, you can get all that stuff at Walmart, probably even cheaper. So why go to a Bed Bath & Beyond to do it? That's my opinion. It's been a right. I know maybe eventually it's going to be wrong. Maybe eventually Bed Bath & Beyond is going to come back. I don't think so. So I think if you're jumping in this for a 6% dividend, I think it's a value trap, and I think it still continues lower. My opinion.
Just for context, that activist headline was from March 26th, and it was several hedge funds trying to replace all the board members on Bed Bath & Beyond, and I don't know what.
Why don't they get rid of all those 20% coupons? If they would get rid of the 10 and 20% coupons,
because that's the only way they get traffic into the store.
Yeah.
When you start couponing, and okay, here, I have personal experience with the kind of stuff. When I had my Quiznos sub shop, which was a terrible investment. Anyways, I've told this story before, And, I went, I was the whole diversified. And then the reason I got into a Quiznos sub shop was I had a friend who was manager at Subway. He's like, and this was the Quiznos was the new thing. This was like 2002. And he said, that he was going to run the store. And anyways, I was like, okay, well, he didn't have the money to do it. So I went 50-50 with him. And I was going to be a passive investor. And I tried the subs. They were pretty good. But you know what? They were couponing the hell out of that right off the bat. And that was a red flag. And I was actually already owned the store, and I was in there, and I can remember saying to my partner 2 days in, I was like, you know what, we got to get rid of this thing because I can see the people's faces when they're paying $10. They want the coupons. They don't want, full price. So the people are coming in, the business pops way up when you give them coupons, but you're not making nearly as much money. If you got a coupon to get your business, you got a troubled business. So, when you got to have these 20%, 30% coupons off to get traffic into your stores all the time, that's a problem. How many Walmart 20% coupons do you get in the mail, Joel? Like 20% off at Walmart. How many do you get?
Okay.
Spencer, how many Walmart coupons come in your flyer for 20% off at Walmart?
Probably not many, but then can I also bring this to
None.
Okay, but listen, so that same logic applies to Kohl's then. You said you like Kohl's. I have never walked into Kohl's without a coupon in my wallet.
I know. And that's why Kohl's, I didn't say, so I've said if I had to own a retailer,
okay, fine.
It's the one I own. I hate them all.
Okay, fine.
Hate them all. I do not own Kohl's. Hate them all. But if I was going to own one, it would be Kohl's. They have traffic, but the same thing. I mean,
it's the same thing.
Retailers have to coupon more to get the business into the stores. I don't know. Maybe there's different ways, but I just say if you have a really good business, you shouldn't have to give your customers 20% off all the time to get them into the store. They should just want to come into the store. So in my opinion, that's a red flag for investing in business when you got to coupon the hell out of your customers to get them in there. My opinion.
Let's call Marc Chaikin right now from Chakin Analytics.
We're late for Mr. Hey, I just want to throw in two real quick. Red Robin faded off that news too, Dennis. Remember that? We're taking it private at 40.
Oh, that was a gift. Gift.
All right, Marc, are you with us? Good morning.
I am. I'm deep in the country in Washington, Connecticut, where I used to live for the summer. So let's hope the voice over Wi-Fi is working.
I'm sure it'll be fine. Marc, we are talking a lot today, talking about healthcare. We really glossed over S&P 3000. We celebrated for like 3 seconds and we moved on. So I guess we'll start there. But what's your reaction to that milestone from yesterday?
I think we're in a mini melt-up. We've really quietly attacked the 3,000 level. The good news is you didn't see CNBC with the big banners, S&P 3,000 like they've done with the Dow. This is still an unloved market. Individuals on the sidelines based on our polls on our webinars. My wife Sandy's doing a webinar tonight, and I know she's going to do the same poll. Not a lot of people believe in this market. Same thing at the hedge fund level, by the way. Hedge funds underinvested. The Merrill Lynch Bank America survey shows that people in general are underweight equities and big outflows. So what does that add up to? Everybody's leaning the wrong way. And we're in what I call blue sky territory. There's no resistance. You've got stocks making new highs like FICO, PayPal, just never been at these levels before. Nobody has losses in these stocks, so the sellers get absorbed early in the day. This is what Chaikin money flow is actually based on. Sellers get absorbed early in the day. That just leaves the buyers, and the buyers are in control here.
Marc, let's just look at some individual sectors. Like buyers are in control in a lot of stocks, and tech has been outperforming. Tech has been the place to be basically for the last decade, but it continues. But what about these retailers? I mean, I just had a little rant on Bed Bath and Beyond, which is in the gutter here once again. But it seems like, you look at the big box, not the big box ones, like the Walmarts are doing fine, the Targets are doing fine. But like the apparel retailers like Nordstrom, like Kohl's, like Macy's, and you obviously see Bed Bath and Beyond, and you see a disappointment from LEVI yesterday. So there's definitely some selling that's going on in certain sectors. What are your thoughts here? Like, is this something that eventually turns it around, or is this just a fact that the weak get weaker and the strong get stronger?
Weak get weaker and the strong get stronger. I always start with the industry group ETF. In this case, it's the XRT.
Yes.
Has a bearish rating in our new power gauge rating for ETFs. The rating's been bearish since early December. And I look at the disappointments in stocks like Nordstrom, Gap, Duluth, that funky company with the itchy underwear commercials that we love, but the stock just makes new 52-week lows routinely. This isn't turning around anytime soon. We know the consumer is healthy, right? They're willing to buy, but we're buying online. I'm up here in Washington, Connecticut. You can't get to this place except with a car. It's 90 miles north of New York. Guess what? Every day, Amazon and UPS are delivering packages to this rental cottage or to the people who own the big house that we're renting on. They're not going into the stores to buy. I mean, you've got a Best Buy nearby. You've got a Costco that's a half hour away. Nobody's doing that anymore.
So what does that mean? I mean, you look at some of these stocks, like Kohl's is a 5.68% dividend, Nordstrom's 4.85%, Macy's, the world has talked about this dividend at 7.09%, Bed Bath & Beyond 6. I mean, these are 6-7% yielders. Do you think eventually, like, it's bad enough that these dividends may not be safe? Because there's people jumping in these things for the dividends. A lot of.
Think Kinder Morgan in 2015, 20% dividend. Advisors were buying it for their clients. The stock dropped 70%. Now, I don't think these companies are necessarily as over leveraged as, say, a Kinder Morgan was, but in theory, they might be a floor under the stock. You'd think with interest rates at the Treasury level so low that this would be attractive, but if you buy a Kohl's at 60 because you like the dividend and then you see it at 47, you're not thinking dividend anymore. You're thinking, how do I get out of this thing?
Yeah. I mean, that's that's just what's continued to happen here in the retailers. Obviously, oil hasn't done well too, but let's move on. You were talking about some sectors that have been healthy. I mean, tech stocks have been very healthy. Even the drug stocks, even the consumer staples for the most part, like the Procter Gambles. So you can look at a lot of different stocks. There's a lot of contributors to S&P 3000 here. What do you like going forward if you think we're going to keep continuing to move higher?
Computer services and software and electronic payments. So MasterCard, PayPal. We really had a wonderful trade, and FICO, my wife Sandy, bought it at 300 on one of our oversold buy signals. It's trading at 340 10 days later. Now, there's an interesting dichotomy. Do you want to get in the weeds here, or do you want to stay top level?
Oh, I like weeds.
All right. Well, I have hay fever, so I'm not a big fan of weeds, but I'm inside right now. So here's Fair Isaac. FICO. A lot of people don't know it. They only have $1 billion in revenue, but guess what? They're central to every credit transaction, from mortgages to car loans to student. Everyone. We all know our FICO score is what we're judged on. So what's the stock doing? Well, it's gone from under 180 to 340 since December. But when you look at the earnings, and this is what makes me a tiny bit wary, 492 this year versus 534 last year. That's not bad growth. What do you think the PE is on this stock? Take a guess.
No idea.
I'll help you out. 78.
Oh, wow.
Now, this is a recognized company. They have a little bit of competition, but it's basically a duopoly. It's 78 times earnings, but it's now in blue sky territory. No yield, trading at 9 times revenue. We have a very bullish rating. The financial metrics in Chakin Analytics and the power gauge are stretched. They got a lot of debt. Price to book is not favorable. Price to sales. But it's a momentum stock now. Now, I don't know what stops these type of stocks. My point is, if you ask me, are you bullish on FICO? Yes, the power gauge rating is bullish. My wife Sandy just made 13% in 8 days. That's amazing.
Yeah.
Just following the discipline. But at some point, we're in that 1973 for Nifty 50 area. But the good news is it's not everywhere in the market. As you say, energy is weak, retail is weak, some consumer discretionary, because that's such a diverse group, is weak. So I get a little bit nervous when you say, what do you like? And I say FICO and MasterCard, because the PEs are so high on these. You know, you're talking about a 17 market PE on the S&P, and that makes some guys nervous. But then there are individual stocks in the Russell 1000 and the S&P with just nosebleed kind of PE ratios. These companies aren't growing at 25% a year.
Like you said, it's not like you can really compare FICO to anyone else to see, well, is that PE high compared to its peers? It doesn't really have any peers. So you can't really compare it.
Yeah. Yeah, I mean, it's a really interesting market, but I'd say it's the supply-demand factor that's working for the market right now. We had three things that we were looking at as we segued from June into July. A, the Chinese trade negotiations. B, the Fed cutting rates. C, third quarter earnings. The first two are sort of off the table. You know, the Fed doesn't meet till late July. They just affirmed at least one cut, basically, with that statement of Powell's. And so now we're into earnings season, and I think that's going to determine whether we stop at 3,100, which I think is very possible, or whether we go even further. You know, we had a long-standing target of 3,000 on the S&P. We've now reached it, but you got to adjust. And here's the biggest metric based projection that we're using. There's a wonderful pattern that people are starting to figure out. If the bond market is up 5% and the stock market is up 5% in the first 6 months of any given year, it's a rare event. It's happened 9 times since 1980. 8 out of 9 times, the market is higher at the end of the year by an average of 11%. We've just been through a very unusual event, and it bodes extremely well for stocks over the next 6 months. Now, how you get there, we never know. You know, maybe you get profit taking after the second quarter earnings reports. In April, you basically didn't get profit taking. You got people jumping on the train because they were still on the sidelines after the fourth quarter meltdown. So I think if the bar is now low because people are lowering estimates and company guidance has been soft, that companies may yet once again surprise to the upside. Big key is JP Morgan's, obviously, I'm sure you've been talking about it, report on Tuesday at 7 a.m. That kicks off earnings season. If Jamie Dimon comes in with a reasonably optimistic view of the economy, and obviously we've got trade as a big issue, I think earnings season is going to be a driver. Toward the end of July into early August, I might get nervous if we're at 3,100 plus.
Mark, when will bad news stop being good news, right? So we're at S&P 3,000 because the rate cut is all but certain. How long is that going to last? Like, how long can that last for? That doesn't seem sustainable.
Well, I think if we can have a GDP that's growing at 2%, and, you know, there are skeptics out there, and the ISM reports last week were soft. The jobs report was okay, but you know, consumer confidence was weak. So you're right. There has been a bad news is good news. I think as long as GDP is growing and there's the hope that we're going to get an improvement in the third and fourth quarter, and we don't see a recession into late 2000, I think that recession is the answer. If the 4 indicators that we look at that have accurately predicted recessions in the past start to flash red, then I think bad news stops being good news. But that hasn't happened yet, by the way. One of the reasons is that, you know, one of the leading indicators versus coincidence, a big predictor of the recession is the stock market. Stock market keeps making new highs. There's less likelihood of a recession.
Hey, Mark, real quickly, what about the financials here? Just someone asked about Citigroup, and Citigroup seems to be
going on
pretty well.
What's going on?
We got some.
What happened? What's the news? Big selling balances or jobless claims? CPI and jobless claims.
Yeah, CPI is out 0.3% versus 0.2%. I don't know if that's going to do anything for you. Year over year, it was in line. So I'm not really sure what is going on there. But on that note, Mark, we're actually going to let you go. We got some movement here. So I want to thank Marc Chakin for coming on today. Enjoy the rest of Washington, Connecticut. I didn't know that was a place before today. And have a good one, Mark.
You too, guys.
All right.
Enjoy. I'll be here all summer, so let's do it again.
All right. Have a good one. All right. What's happening here, guys?
All right. Well, you got the CPI and you got the jobless claims here. So I haven't seen the official numbers here, but if they're, if it's a hot number on the CPI, then all that tame inflation that they were talking about is taken off the table. And if the jobless claims were, better than expected, then, I don't know,
Jobless claims were worse than expected. So
worse than okay.
So I'm not really sure what to take away from that.
It's funny. You just asked about when bad news is going to start being good news, or bad news beat bad news here. And I don't know, CPI up 0.1. What were the expectations on that? Right in that area?
For CPI, sorry, I was reading jobless claims numbers. CPI, the estimate was for June was 0.2%, and it was 0.3%. So, and that's core CPI.
All right. Well,
jobless claims, I guess you could say they were better because they were lower than expected. So 209,000 jobless claims versus 220,000 expected. So I guess that was better. It was lower.
All right, so a couple hot numbers. Core CPI up 0.3 and jobless claims better. So I don't know. I mean, how much longer can we keep talking about whether they're going to cut a quarter or a half is probably off the table now. Now a quarter. I mean, Powell seemed pretty firm yesterday, right? I mean, you listened to the testimony as well, Spencer. I mean, he didn't seem to be.
I don't think a half's off the table. Not from what listen to him.
No, I would agree.
What are they saying in the percentages? Do we have those numbers? Because you can be saying that all the time, but he was as dovish as you can get, really, in that conversation. He didn't even emphasize anything good. It was all just, the risks. The risks. Sounds to me like he's going at least a quarter, and he might even go a half.
We've got according to the CME's Fed Watch tool here, for a target rate cut of, let's see here, of quarter point 71%, and target rate cut of a half point 28%. According to the CME's Fed Watch tool. I imagine that'll change as we head towards July 31st.
All right, we did the battle of 3,000 continues here. We did have a dip off that mid-range on the session, 3001 right there, 3,000. That was a nice little sell. I mean, for right now, you got a triple top to lean on here at 0675, and then yesterday's high at 0750. So that's your bogey. We take that out, and blue skies is as Mr. Chakin would say. Below that, you look at your pre-market low at 95 and a quarter. Dennis, the imbalances hit when that news came out. Any notable imbalances today?
I'm still trying to trade here, but yeah.
Go.
Looking, it's tough. So just put it in perspective, guy. I'm trading like crazy always when you got news like this. So it's tough doing a live radio show. You see people commentating, on CNBC, and these people aren't trading while they're doing it. So sometimes, I'm going to be, off to the sidelines trying to trade. When you see S&Ps fall 4 or 5 handles, I got to adjust. I got to move stuff. I'm doing arbitrage. I got systems running. I got a lot of things going on. So last couple shows, we've had some wicked little movements during the show. When we get stabilization during the show, you can talk. You can do all kinds of things. It's easy. It's easy to do a radio show when you're not doing other things. When you're trying to trade, do a radio show, completely different animals. So obviously, I've been, bouncing around here a little bit in the background, trying to do some trading here because we just had some significant fall there off of that number there, trying to get informed myself, on what is going on in the background. But what I'm seeing this morning right now is banks are taking off on this. Banks are lifting here. JP Morgan trading up, Citi trading up, Bank of America. So they're lifting a little bit on this data. Not surprising because the TLT selling off. Not like yesterday where it's a wicked moves off the banks, but we're seeing strength in the banks. Obviously, other sectors, XLU, probably going to be a little bit weaker here. Keep an eye on that TLT. I mean, it's very important for certain sectors. I know everybody likes to watch the S&Ps, but the TLT is very important as well.
All right, so with the banks moving like that and the TLT moving down but not breaking down, then that kind of supports the argument that interest rates aren't going down as much as everyone thinks, right? I mean, I keep trying to make that point and I keep getting shut down on it, but if they're really these banks would be going down. They seem to be holding a bid, but Dennis,
the data keeps coming out like that. We saw that jobs number, and you would think that would make Powell back off a little bit, maybe in his dovish tone. That did not happen yesterday, though. So for whatever reason, whether I was going on a rant yesterday and joking, but a little bit serious at the same time, he wants to keep his job. Trump's over there basically threatening him on live TV that if he doesn't do the right thing, he's going to can him. I mean, I don't even know if it's possible that he can do that. But, we saw that interview, which was done, when somebody asked, I forget who it was, I believe it was somebody off CNBC asked that question. That was before the last meeting. And, talking about Powell, let's say, and he was basically threatening him. So I don't know. You can't know what's going on inside his head. Does he just ignore all that? Or is there really, fear there? And I'm obviously he's only one vote, he's only one person as well there. But I still don't understand. I do not understand what data they're looking at that justifies potentially going a half. I mean, I don't even know why they're lowering rates at all. I don't get it. But we've had this rant, multiple times on this show. What they're reading is maybe different. Maybe they're just looking at the international markets. Deutsche Bank is a mess. I'll give them that. If they're looking, at the European markets, they haven't performed well. And there obviously is a lot of red flags over there. So if they're thinking from a global perspective, maybe that's it. But I mean, if you're thinking from a U.S. perspective, you got S&P 3000. We just made new all-time highs. If you're going to lower rates in this environment, what are you going to do when the market starts?
I have no idea. I have no idea.
I think you got to separate it. You got to separate the global picture from your own picture, because you're not controlling global rates here. You're controlling the rates, for the U.S. So I don't get it. I don't, if he was controlling the global rate, if there was such a thing, I understand looking so much and putting so much emphasis on the global picture. But, when he was talking, was it yesterday he was talking, the day before? I'm losing track of days. But anyways, when I was watching him talk, he keeps focusing on the global picture.
Yeah. How the hell are we going to help everyone else out?
The U.S. picture is very, from the market's perspective, it looks pretty darn good. So I don't understand exactly what, he's thinking, but, it is what it is. So, he's obviously stayed dovish. So is the data today going to change his opinion? Probably not. That jobs number didn't change his opinion. So I doubt the data today is going to change his opinion as well.
And what do they see going down the pipeline here? I mean, to take this dovish attitude, I mean, it's really amazing. I haven't seen like this much of a discrepancy between, what the market is doing, what the Fed is doing. I don't even know how far I could go back to find such a discrepancy between what you're seeing in the market and what the Fed wants.
I mean, they're supposed to be data dependent, so they're supposed to ignore the market's actions. So what they're saying is, that the market, which usually prices 6 months in advance of, news, is what they used to teach you, when you took your economics classes and your finance classes. But what they're saying, what he's basically saying is the market is wrong. That the market shouldn't be, as strong as it is, because there's a lot of things to worry about out here, and we're going to address those worries. The data with the jobs number coming Friday, that data was opposite to his opinion, but he ignored it. He didn't even talk about it for the most part. So that makes me think that he's going to ignore today's data too. So I don't know if any of this data is going to change their opinion that we're definitely going a quarter, and I think there's some people that want to go a half. So it would not shock me if they went a half. Why is beyond me, but that's the tone that I got from that press conference. I don't know if anybody else agrees with me, but that was the tone I got.
And this Fed has turned our show into a macro show. We were never a macro show.
I know. Well, how can you not be right now? We're a trading show. We're a day trading show.
No.
But whoever doesn't watch data and whoever just says, oh, look at charts, it's all that matters. I mean, look at the move you just had. Look at the whipsaws you have. So it matters. It matters. Maybe if you're a long-term trader and investor, maybe it doesn't matter. You just think, I'm buying good companies for the long run. I don't want to own companies like Bed Bath & Beyond because obviously there's issues there, maybe in the long run. But I want to own these growth stocks. I want to own, these companies, the tech companies that I think are going to be the future. So maybe if you ignore all this stuff, if you have your long-term investing hat on always and you're a long-term investor, maybe it's good to ignore all this stuff. If you're a day trader, if you're a short-term trader, you absolutely need to be following what is going on here and the headlines, because boom, you could have a whole thesis, the prettiest chart in the world, and then a headline comes out and that thesis is out the window. So I think there's a lot of money to be made by trying to predict, what the next move from the Fed is going to be. And you can read the tea leaves in these press conferences there. So I've always said, I think as a day trader, you need to have a little bit of fundies, a little bit of technicals, a little bit of everything, but you need to get a thesis and then use the technicals to time your trade. But I mean, if you're just flat out looking at charts and that's it, I mean, I guess if you're just, short-term scalper, maybe, intraday, maybe that matters, but you're got any time frame that's holding stuff overnight. This stuff matters.
All right, 8:41 here. I almost feel like, we have until July 31st until we're going to get a rate decision.
What's the date on that?
July 31st, 2 p.m. That's when the FOMC meeting is. So, Marc,
Should we just take a break and show until then and then see what happens?
We got 3 weeks until then. But I do want to move on to other stuff because there is a lot of other stocks that I would like to hit on moving for one reason or another. We talk about bad news being good news. This is news that the market didn't seem to digest yesterday or care about. I was a little bit surprised. Zoom, ZM, a major vulnerability was discovered in the software for anyone who uses Zoom on Mac, which is myself. I have a Mac laptop. We use Zoom for our show. A major vulnerability was discovered with regards to their servers, and that a bad actor could gain control of your webcam essentially via Zoom. Zoom initially was like, we're not going to do anything about this, and then they're like, okay, we'll patch it up. Apple apparently last night or this morning released a separate patch. Basically, Apple overruled Zoom. It was like, this is a problem on Macs. We're going to fix it for you. So Apple just kind of went around Zoom and fixed it on Macs. So the vulnerability apparently has been fixed, but I was just surprised that there was no reaction. I did see several, delete Zoom right now type articles on the internet yesterday, and the stock didn't seem to react at all. So I was a little bit surprised about that. But
this market as a story, if you got a good story, sometimes they can ignore a scary headline like that. I mean, what's Zoom trade, like 30 times sales or something silly? I mean, the valuations, you can't even look at it from a valuation perspective. I mean, if you're a value, it makes absolutely 0 sense to buy something like this. But it's still, got a story to a certain extent. I mean, you read something like this and you think it punches holes in the story. So I would think you're right, Spencer. I would think on a headline like that, I'd be like nervous and not want to own it. It completely shrugged it off.
Yeah.
Completely shrugged it off. So it's telling me that the story is still intact here. People still want to own it. The technicals look pretty good on it. I mean, if you're just ignoring, and maybe in this case it's an argument against what I just said, but if you're just looking at the technicals on this thing, got a little cup and handle going. It looks like, it's trying to get into that 93, 94 area, and it went straight down, whoosh, from 100. We say what goes down quickly through an area can go up quickly through an area. I mean, it looks like from a technical perspective, it looks like it wants to break out. Now, I would not buy that technical breakout because I would be putting a little bit of fundies in there too, thinking, well, I don't like that idea. Maybe there's going to be an analyst that could downgrade it off of that information. So that's why I would be scared to play that technical formation. That's, showing you a little bit of, throwing the fundies in with the technicals. The fundies would make me not want to buy that breakout. Not saying valuation, just saying that recent article, is a little bit scary for me as an investor. I'm not following closely, but what you just said sounded very scary. And that means I'm probably going to lay off.
Hey, Spencer, how long? I mean, the bug has been out for a little while, right? Wasn't it addressed by one of the CEOs? Because I'm just looking. You had a day in this thing where it just fell out of bed. I don't know if that was a downgrade, kind of hanging out. Let's see. That was on June 24th.
That was Goldman Sachs, I think.
Oh, yeah.
But yep. No. This bug was discovered like this week.
Okay.
And it was discovered by like an amateur, cybersecurity person. So like just like a white hat, So this is not something that the company, just discovered on their own.
Okay.
And their initial response was like, yeah, we see this problem, but we're not gonna fix it. They reverse course, it seems like, but still mildly concerning for me because I'm a Zoom user, right? And I don't want
Zoom.
I don't want people hijacking my webcam.
That's good. I like it too.
But also because their response was not inspiring at first. So all right,
so watch what we say on this show. They're gonna be like, oh, we can go hijack the pre-market prep show and show all kinds of crazy stuff.
Yeah.
Let's see here. You had all time. Let's just call this 93.03, 24-point move on the downside, 83.10 low. So this 95 area, that's what I'd be keeping an eye on. I work through this big red candle. We had the big down day. Get up. I look at 95, get back up over 95, then I expect a revisit of to 100. The longer it takes you to recover that $95 level, you may roll over and maybe retest those lows at 83, 84. But kind of a quiet day in it yesterday, so we'll keep an eye on that closing price of 92.72.
Grubhub also in trouble this morning here. The New York State Liquor Authority is considering new rules that will significantly cut the amount that a food delivery service like Grubhub can charge for deliveries. This applies to other companies like Grubhub, but Grubhub is the only public one to my knowledge. So they're considering a new rule that would basically mandate Grubhub can't charge as much as they've been charging for deliveries.
This is such a headline-driven market. You think about all the headlines we talk about, but there's big moves off of headlines. Like this is down 6.5%. It's down $5 on this headline. That being said, the stock seems to be loved, and I would not be surprised to find some buyers, and it bounces in that $70 area there. But again, if you're just looking at technicals, you can have the prettiest chart in the world. It comes out with a bad headline like that, it's going down. I don't understand people that just you trade on technicals. I can't understand it at all. I think, in my opinion, you got to trade on everything. Technicals are a nice tool. Like I just use the tool after the news, to figure out where it goes. But I mean, if you're holding stocks overnight, there's so much headline risk and stuff, and you've got to work out of different things. I mean, this chart didn't look bad. It's a stock that's been moving up. It looks like it was bumping up, and now all of a sudden, bad headline, boom, right back down to 70. So headlines matter.
All right, pre-market low, 71.79. You're dangerously close to that level right now. Maybe if you're looking for more on the downside here, boom. I do see three lows right at the 70.70 area, so keep an eye on that as potential support. Psychological 70 under that 68.83. So this is quite a bit off its all-time high, man. A lot of these stocks, man. This thing hit in September of last year. It hit 149.35. So 2-for-1 stock split here in Grubhub.
I found a retailer, Dennis, that you would like. American Eagle announced a distribution deal with Green Growth Brands this morning. You'll be able to buy cannabis-infused personal care products at your local American Eagle store.
It's also ex-dividend. There's three headlines here. It's ex-dividend, 14 cents, adjusted close, 16.56. And I believe it announced a buyback last night.
They did, 30 million shares to be bought.
Yeah, so announced a buyback too. So multiple headlines driving it higher here. Stock is in the gutter. This is the exact kind of stock that I like to sell on the rallies. Now, that being said, sometimes these rallies can be wicked, and I bet you there's some short interest in this thing. So I don't know if I'm going to be day one, coming in here and just fading this or not. But you get anywhere up near that 18 and a half area, maybe if it gets silly. Yep. That's when the opportunity maybe to short it, or if I was long it, to sell it, because I think long-term American Eagle Outfitters, I don't think the outlook is pretty.
You did get an initial pop up to 1748. You faded off that. Let's zoom in on the dailies here. Let's clear 1755 first. We're currently trading. I mean, it got the pop, and now it's not really going anywhere. Make sure if you're trying this from the long side that it doesn't go red on you, because you are sitting perilously close to the low of the move at 1645. So hanging in there, but if this is supposed to lift the stock, it's going to take a little bit more than that. Not a good looking chart for AEO. All
right, the calm before the storm in earnings, but we did have Delta Airlines this morning. DAL reporting a EPS beat and a sales beat. The EPS $2.35 versus a $2.25 estimate. Sales of $12.53 versus $12.48 billion. So beating on both those numbers. Like I said, Q3 EPS guidance was in line, and they raised their full year EPS guidance by 75 cents, from $6 on the low end to $6.75 on the low end of the range.
The stock has struggled at 60. We're over it in the pre-market, but we're starting to fade. I'm opening my book right now here because I want to go look in the book. JV Spec, if your book is open there, would you mind going and looking and see if there's something at 60 in New York? Because that could hold down the open here. It's interesting that it's starting to fade here now. I'll just go grab an imbalance for you. The AL does have 48,000 shares to buy, and that's probably going to grow. So, maybe it can plow through whatever is at 60, but just because it hit it right on the kisser almost 2 days ago makes me think there might be some size at 60.
And pre-market high 61.27. That's a great level to keep an eye on because the all-time high is 61.32. So right there,
100,000 at 60. JV Spec says so.
100,000.
Yeah, 100,000. It's traded 351,000 though. So when it's already done that kind of volume, it can probably chew through that. But sometimes it's going to hold it down a little bit. Everybody's obviously, there's going to be some people who aren't just trading the open of those 351,000 shares worth of volume there. So it could definitely open over it, but just keep in mind it might be leaking a little bit here because of that size at 60.
All right, quick thoughts here. Have we covered? We haven't covered Boeing since we're just talking. I'm not sure when their earnings date is, and do we think there'll be a pre-earnings rally? Dennis, we talk about that in a lot of stocks here.
Maybe.
Yeah. Boy, oh boy.
Boeing is July 24th before the bell.
So it's 2 weeks. 2 weeks away. I think a few days before you might get the pre-earnings running. There's going to be so many headlines before that. I don't want to buy it that far ahead saying there's going to be a pre-earnings run up because a bad headline could come. I mean, this thing has headlines almost every night. So, you don't know what the next headline is going to be, but they never seem to be good headlines. So I'm probably just going to lay off maybe a day or two before I might get interested, depending on where it is. But it's probably not going to be at 352 in 10 trading days. So I'm going to lay off on this one. Headline, risk, stock, nothing more than Boeing.
All right, not much in the way of ratings this morning. The biggest ones that caught my eye, the analysts are now all chasing Comcast. They caught an upgrade, I believe. Was that from Goldman Sachs this morning? Did I see that?
Comcast, that was yesterday.
That was yesterday. There was actually a few ratings. You look at the wrong day, I think.
I'm on the wrong day. Oh, my apologies. Today.
There's quite a few today.
Today is the 11th. There we go. All right. Abercrombie & Fitch upgraded at Wedbush to neutral. Weight Watchers notable. Upgraded at JP Morgan to neutral.
I keep putting WTW.
No.
Why do they want to change the symbols? That's my pet peeve. I've typed in WTW for Weight Watchers for years. And then I'm like, oh, yeah, they changed it to WW. I guess, that symbol makes more sense. But it's just annoying that, I've typed in the symbol for years. I just naturally go WTW. I don't know how many times I got to do it to break that habit of WTW. But anyways, I just did it again. It's WW.
They didn't just change their symbol. They changed their name. WW is the name of the company. We forget that. But it's no longer, it's not called Weight Watchers. It's called WW. But in any case, we can call it Weight Watchers to, for the sake of
no, that's silliness in my opinion.
Whatever. Okay. So WW getting an upgrade, JP Morgan. What else did I see as far as upgrades are concerned? Nothing super notable.
Freeport McMoran was upgraded.
McMoran upgrade to buy at Deutsche Bank. Is Deutsche Bank still even in the sell side business? I'm not really sure. That's it for upgrades. As far as downgrades, JB Hunt, JBHT downgraded Credit Suisse. Actually, Credit Suisse with a few downgrades this morning in that space. JB Hunt downgraded to neutral.
Alcoa got downgraded, Deutsche Bank.
Yep, Take Two downgraded at Jefferies to neutral or hold. Same thing. Who else did we get? International Paper downgraded to neutral at Citigroup, IP, and no, that's kind of it. But not a lot really. They're not really moving. The
Weight Watchers is up a stick here.
The Weight Watchers one moved.
Yeah.
I don't know too many other ones that moved off their rating.
Cantor got this price. They reiterated their buy, or they came out. I guess they were not rated, and they came out with their buy rating again on DVAX, small little stock, $3.81. Came out and put a $20 price target on the stock. So it actually last night went up to $470. I was like, are you kidding me? It's up 30%. It was up 25% just because an analyst put a $20 price target on it. Anyways, it's come back down to earth, but it's still trading up 11% here this morning. DVAX. So if you like trading those little ones, that's your catalyst here this morning. Cantor with the buy rating, put a 20 PT on it. So I think this is a stock that's in a downtrend here. I think that's a little bit. It gets up 470 or 490 or $5 on this. I think
That's where it got to. It got the initial pop.
crazy.
Yeah, where'd they get it to here?
Well, I tried to buy it when the rating came out, and it was like 404. I was like, okay, it's gone at like 410. I could have bought like 410. It went 469. Like, I was like, who's buying this thing up a $3 stock up $1 because an analyst comes out that actually had a rating on it before, but then they went not rate. Sometimes when they change analysts, and they threw a big PT on it, $20, but you buy something up 28% just because an analyst throws a PT at $20 on it. Wow, aggressive.
And what about this? Weight Watchers is up a stick at 22.85. That's a big move for it. Just hanging out there too.
That's had some life though, and that has been absolutely destroyed. I mean, 2018, this was a $100 stock. It's 21. I'm not fading that because there could be a short squeeze. Am I coming in investing in Weight Watchers here? Probably not, but it's come down enough that it's not like these ridiculous valuations before. I have no idea. It was Oprah, obviously, the Oprah effect that really drove that thing up from, $6 to $100. Silliness. It's back down to earth, but it's got a little, if you look at the monthly chart, a little round and bottom coming around here a bit. I mean, it could show some life for a bit. It's not out of the realm of possibilities to think this could be a $30 stock again, especially when it was $100 back in 2018. A lot of overhead supply, though, so it's going to be a struggle to get there.
I think JP Morgan's been pretty good on this one too. I think they were one of the analysts that kind of caught it before. Don't quote me on that, but I think that they might have been one of the first ones to downgrade this stock on its way down. But we'll have to check on it. You could probably very, very, very high short interest in this one. So be careful with this one. You got a lot of competition here if you're trying to cover a short. What else did we have for
Goldman had a big retail note. They are saying to sell Advanced Auto Parts. They're saying to buy O'Reilly. They are also saying to buy Costco, Target, Walmart, BJ's, Home Depot, Lowe's, and Williams-Sonoma. And sell Bed Bath & Beyond while you're at it. So
they got ganged up on the poor Bed Bath.
Yeah, pretty much. Buy everything except for Bed Bath and Advanced Auto Parts from Goldman Sachs this morning.
Hey, what's Prime Day? Because we're getting a lot of people here asking about.
Prime Day is next month. It's 2 days. It is next Monday and Tuesday.
Always seems like a run up on Prime Day, but this thing's run.
Great point.
Look at the Amazon. Is that all time? How far are we away from all time highs now? We're getting close now.
You said this yesterday.
2050.
Yeah, 2050. That was back.
Unbelievable.
Yeah.
Strong get stronger. The weak get weaker.
Man, and it had the run up, and then like it just lulled you to sleep there with those 4 or 5 days of consolidation, like right around 1950, 1960. Man, I wish they would do like a big old stock split on this one. They won't because high price stocks are in vogue, but I don't know, just hard. I guess you could trade fractional shares of it. And Dennis, you said they have a pretty decent spread in it, right? During the day.
I'll be shopping. I'll tell you that. I'm such a sucker. They get me every year.
What are you gonna buy, Spence?
I don't know, but they got me on Prime as like you get like a free month. This is like 3 years ago. I got my free month, and I'm like, okay, I'll do it for the year. And every year, my subscription re-ups at the end of June, 2 weeks before Prime Day. Every year I say, okay, I'll cancel after Prime Day, and I never freaking do it. This is like 3 or 4 years this has happened now. So you're welcome, Amazon shareholders, because I'm such a sucker. But I'll
get the Spencer Israel cash.
I'm sure I'll buy something. I don't know what that is, but it's a 2-day event now. So watch for Prime Day. And I also saw that eBay is doing their own thing to counteract Prime Day. So maybe watch Amazon and watch eBay next couple of days. But 8:59, guys, any final thoughts today?
Yes. Do you know what today is?
July 11th.
Yeah.
No.
1 month after my birthday.
No, I don't know.
7-Eleven Day.
Slurpee Day.
Free Slurpee. Wait, do they have those in Canada?
Yeah, we got some 7-Eleven stuff kicking around.
Yeah, you can get a free Slurpee.
Not near my cottage, but
yeah, in between 11 a.m. and 7 p.m. you can go get a free Slurpee. So that's.
Do you go and get your free Slurpee every year, Joel?
I got one a couple days ago. If it's
free stuff, he'll do it.
Yeah, if it's super crowded, I won't go.
My
And
kid would be all over that, man. The 4-year-old would be all over that if there was a 7-Eleven nearby. It's free to him though anyway, so he would be all over on any day.
All right. Thanks for
final thoughts for me. I mean, we had a little decline off the CPI and jobless claims, but we held mid-range on the session, which is good. So above 3,000 here, I'm looking for us to take out the all-time high at 3,007.50. You also had a high at 3,006. So no such thing as a triple top, right, Dennis? So that's the area. After that, we'll incorporate the blue sky Marc Chaikin rule. We have an average daily range of over 25 handles. So that could take us up to 29, or excuse me, 3,030 if you're super bullish today. But let's see what happens at that all-time high.
All right, that'll be it for us. Thanks to Marc Chakin. Thanks to all of you in our chats on the YouTube and premarket.benzinga.com. Please remember, all the information from our show is meant for informational purposes only, not meant to be investing or trading advice. You can catch our podcast available anywhere podcasts are available. And everyone have a good rest of your day. We'll be back with you on Friday.